Welcome to another S&P 500 analysis. Today is January 20th, 2021. The S&P 500 did what it said it was going to do, make a new all-time high. Today's new high should not be a surprise to you if you have been following this channel. And by the way, if you are not a subscriber to this channel, click on the subscribe and also the notification icon so you won't miss any future video from me. In a recent video, I pointed out how the E-mini S&P 500 future was telling us to expect a new all-time high. I also highlighted the positive divergence between the cumulative advanced decline line and the S&P 500, and the new high from the cumulative advanced decline line are telling us the S&P 500 is not ready to roll over. I also shown you the expansion on the new 52-week high over the new 52-week low. And for the Dow Jones Industrial, I mentioned it numerous times about the non-confirmed high from the Dow Jones Transportation. And the Dow theory is telling us to expect a new high from the Dow Jones Industrial. In my last week's video summary, I said until we see a deterioration in the internals, we should continue to watch for new high. And here we are, new high. So let's go and look at this sentiment and the internal. Then we'll look at the indexes and see what the market is telling us now. We'll also take a look at Bitcoin, the US dollar, gold, and silver. On this sentiment chart, you see that the VIX is sitting at 21.58 today. It closed at 21.58. So it's still sitting inside of this 20-30 zone, and it's at the lower level here near the 20 mark. So the market is still being a little cautious. The market participants are still not panicked or fearful. And also, you see the put-call ratio is sitting at 0.5. So the market is still risk on. The up-down volume ratio was kind of mild, and it was sitting just a little bit above that 1-to-1 ratio. And also we noticed that the advanced decline, the daily advanced decline today, the advancer led the decliners by 901 issues. So although it's very respectable, but it's definitely is not the value that we would expect for a market that closed up, 1.4%. Now, for the new 52-week high and 52-week low, in the New York Stock Exchange today, the 52-week high outnumbered the 52-week low by 228 issues. So that is still very good and very positive. And once again, the cumulative advanced decline line continued to push to a new high. So it's in sync with the index, and the S&P 500 closed with a new all-time closing high. And so did the cumulative advanced decline line. It went up to a new all-time high. Now, looking at the Nasdaq market, the Nasdaq up-down volume ratio is a little bit better than the New York Stock Exchange. It's sitting at 1.5 times more up volume than down volume. And the advanced decline a little bit weaker than the New York Stock Exchange. You only have 413 more advancers than decliners. And the Nasdaq market closed up more than 2% today. It closed with a 2.31% gain and almost gained 300 points. Now, looking at the new 52-week high over the 52-week low in the Nasdaq market, you see there are 520 more new highs than new lows. So that is very strong for the Nasdaq market. And the Nasdaq cumulative advanced decline line also pushed through into a new high, along with the Nasdaq 100 close at a new closing high. As you can see from the sentiment indicators and also the internals, they are all still showing a lot of strength. Don't be surprised to see the market continue to push higher. Now let's go and take a look at the indexes and see what they are telling us. Here we are looking at the S&P 500 daily chart. I put in this channel line just to kind of show there is a little bit of a longer term channel being developed. We've been focusing on this short-term channel, and also we've been using this particular flag here as a mean of doing some projected move here to get these projected target. But also in addition to that, we've been paying attention or been watching this 141 extension as well. So as you can see on this 3900 area, it is in confluence with this upper channel trend line. As it moves along this upper trend line here, then we're basically looking at this 3900 area. Remember, we're watching for a possible pullback at this 3720. So right now we still keep this in the back of our mind just in case something going on and have the market do a little bit of a pullback and consolidate. Then we continue to watch this 37.20 as the first level of support. And here we are looking at the Nasdaq 100. As you can see on the Nasdaq 100, also put in a new closing high, and it is moving up toward this 13,515. That is a projection from this swing, and basically project that up. So right now we kind of keep an eye on this 13,500 on the upside, and then on the downside we continue to watch this 12,439. And here's the Dow Jones Industrial. You see the Dow Jones Industrial closed at a new closing high today. So right now we still continue to watch to see would it be able to get up to this upper channel here up near this 32,000. Essentially there's a projection up here at 32,221. And that is the projection based on this particular bull flag that we are using to project some major move target. And here is the Dow Jones Transportation. It just squeaked right in for a new closing high today. Did not make a new intraday high, but it's the close that is what matters. But still, we expect this probably will come up and take out this intraday high. And that's up at that 13,200 plus. So again, we basically have a projected move based on the symmetry move. And you could use this as a little bit of a bull flag, if you like. You know, you could do this and then use that to project up this projected major move target, 13,384. So if it pulls back again, we basically are looking for the possibility of retesting this level here at 12,379. And here's the Russell 2000. The Russell 2000 also made a new closing high and also put in a new intraday high, getting close to this 2,200 that we've been talking about. And also the other thing is we have this extension projected up here at 1618, which is 2,177.80. So that is getting close to it. It's just a little bit over 4 points away. So we'll keep an eye on that. If it exceeds that level, then we're basically looking for this 200% level at 2463.80. And if it decides to pull back, then we basically are looking for this upper channel trend line as the first level of potential support. And if it decides to back into the channel, then we'll be looking at this 1935 as the next potential support. Now let's take a look at the US dollar here. This is a weekly chart here, so we're basically taking a big picture look. Might be trying to come back up and test this 92 level here before we zoom back down to this 87.42 area, because I do see it possibly come down and test this lower level and even possibly come back into the zone near the 84.70 area. Okay. So as you can see that the US dollar has continued to show weakness. And also I want to highlight the fact that remember right here at 2018 to 2020, we see that dollar has been rising. Okay, so now, and I want you to keep that in mind when we talk about gold, because a lot of people is trying to do some correlation with the US dollar and gold. Just like anything else, correlation work until it doesn't work, right? Okay, so don't count on it every time. That's basically what I'm trying to say. Now let's take a look at Bitcoin. Recently, Bitcoin been moving up, and a lot of people has been watching that. And right now, I have a 4-hour chart here on Bitcoin, and looking at this right now, we're essentially keeping an eye on these level here, this 36,500 and also this 32,800. So I'm just kind of rounding off some of these numbers. So you can look at 36,500, 33,000, and here is the 30,000. I also post this chart here on my Twitter stream on Bitcoin. So you might want to follow my Twitter stream to get some of the updated chart that I post, and you can see that these level here that I have marked off, the 36,500, 36,500, 33,000, got a little confluence here between this trend line and 33,000. So I'll be watching this 33,000 level to see what it's going to do when it comes down here. If it breaks this 33,000 level, then there's a good probability that it's going to come down and retest this 30,000 level. But right now, basically, it's in the middle of this converging, you could say a wedge or a triangle or whatever. One would not, at least I wouldn't initiate any new position here on the long or the short side, because basically it's sort of in Never Land, right? In the middle of the potential resistance and potential support. So I just wait for it to get to one extreme and then take appropriate action if the opportunity arises. Now let's take a look at gold. Right? Remember we talked about that dollar was up, rally from 2018 to 2020. A lot of people was talking about that the gold move inverse to the US dollar. Remember we said the US dollar moving up 2018 to 2020. Okay, now we take a look at gold. Right, gold moving up 2018 to 2020. So there is no inverse correlation. Right? And a lot of people is talking about gold starting up a new bull market. No, it's not starting a new bull market. It's been in a bull market. Look, it's coming up to this top here. It's forming a long-term, could be a double top or something like that. So you could say that it is doing a pullback, a possible pullback, but definitely it is not starting with a new bull market, because the bull market started back here, somewhere around October 2018, sometime there, right? So it started back in 2018. So right now, I'm basically watching gold to see, is it going to pull back and break this 1804 level, or is it going to break above this 1923.70 level and try to retest the high? Then maybe it will continue to move higher within this bull market that started back in 2018. All right, so don't talk about a beginning of a bull market. It is not. We're basically looking to see would it continue with an existing bull market. And don't talk about the dollar correlation to gold right now, because it doesn't do what it normally do, or do something that sometimes it does, in an inverse correlation. So just watch the price action of the individual market and trade accordingly. Don't try to, do these correlation thing. If it is that easy, everybody will be rich and they just all just follow the correlation and trade the correlation trade. All right. Yes, I grant you that sometimes it works. All right. Just like everything else. Right. Everything sometimes they work, not all the time. Right. And when you rely on them, and that's when it doesn't work, and that's where you get your account get blown up. All right. So just keep an eye on the price action for gold, and basically looking for the possibility of breaking 1804. If it breaks below 1804, then we could see lower prices. If it breaks above 1923, then we could see higher prices. So those are the two key level that I be watching. No, it's not for, next week or whatever. Okay. So these are weekly chart, and they are for a little bit of a longer term. If you're thinking about doing day trading, don't take these information into account for your day trading. And now let's look at silver. This is a weekly chart of silver. You see silver been sort of in a consolidation mode for quite a number of years, right? Then it finally broke to this $22.70 level and came up all the way up to this $29.50. See these potential support down here, right? Back in 2011 and 2012. And it finally broke through and then came back in and rechecked this breakout level somewhere around this 22,725. So right now it's basically been bouncing between this 22.75 to 26.35 area, right? So we'll be watching to see would it be able to come back up above this, get up to this 2950 and see would it be able to break that 2950. If it could break that 29,250, then we're basically looking for the possibility of this thing moving higher and might even get up to this near the $37, $38 level. But if it unable to do that, and it is pulling back and check this 2272, and it failed to hold that level, then I'd be looking for silver to come back down to recheck this $19.60 area here, this price level, and essentially come back down and back test this breakout level here at the 1960. All right, so that is a look of dollar, Bitcoin, gold, and silver for a big picture look. All right, so I hope that will help you to understand some of the correlation myth. So good luck, and be sure to smash that thumbs up for me to help me promote and share this video on YouTube. Thank you for watching, and stay safe.